Nick from Nick's Investment Lab, and today, RDSP Quick Facts. What is an RDSP? An RDSP, or Registered Disability Savings Plan, is a type of investment account that is created to help individuals save for retirement and is specifically limited to those who qualify for the disability tax credit. How does it work? Well, RDSPs are able to attract grants and bonds up until the end of the calendar year in which the beneficiary turns 49. Now, I did mention previously that these accounts are intended for retirement purposes. The reason for that, or I guess further evidence of this, is that any withdrawals done within these accounts, if there have been grants or bonds that have been paid in the prior 10 years to the withdrawal, those grants or bonds must be repaid. So shortly here, I will get into some of the specifics around how much those grants and bonds actually can be, but you note to prevent people just withdrawing these and using them for spending purposes, they do have this clawback rule. So let's talk about the bonds briefly. So the bonds, you can earn up to $1,000 per year, and this is not contribution dependent. So without adding any money to the RDSP account, you could potentially receive $1,000 per year. Now, a couple caveats to that. Number one is, though no contributions are required, it is income dependent. So if your income is below, it's roughly $37,500, I'll put the exact number on the screen, in 2025, you would qualify for the full bond amount. If your income, once again, is between $37,500 and $57,000, then the amount will be reduced. And if your income is above $57,000, then you will not receive any bond. Two last points on the registered disability savings bonds. Number one, there is a lifetime limit of $20,000 that can have been received per beneficiary. Additionally, is upon account opening, grants or bonds can be paid for up to 10 retroactive years. So let's say that you have a condition that has qualified you since 2013. You could open an RDSP today and have bonds paid up to $10,000. So from 2025 now all the way back to about 2015. Unfortunately, 2013 and 2014 would not be able to be included, as I just alluded to. You can only go back 10 retroactive years. As amazing as the bonds are, the grants are equally as enticing. So math on this is a little bit crazier, so pardon in advance. I'll try to have a few visuals on the screen to help illustrate this a little bit better. But with the grants, you can receive a lifetime maximum of $70,000 in our registered disability savings grants. Upon account opening, you can also go back 10 retroactive years, but you can't go back 10 retroactive years all in 1 year. So I'm going to give you some limits here, but per year, so let's assume we had no retroactive years, you could contribute about $1,500 and have that matched by the government. So two different scenarios. Number one, your income is below, once again, sorry for the approximates, I'll have the exact number on the screen for 2025, but about $117,000 for household income. If your income is below this $117,000 amount, for the first $500 you contribute, the government will match you $3 for every dollar. So to clarify that, you put in $500, the government's going to give you $1,500. Pretty good, right? Now the next $1,000 you contribute, the government will give you $2 for every dollar you contribute. So put in up to another $1,000, the government's going to give you up to $2,000. Now, I realize $1,500 at once can be a lot. So one way people like to do this potentially is do $125 a month, which makes it a little bit more palatable. By doing so, once again, you put in a total of $1,500 and receive $3,500 in grants from the government. This does not count the bond amount that you potentially could earn as well. Now, if your income is above the $117,000 approximate, the $1,500 is still true. You still can get matching from the government, but it will be dollar for dollar. So $1,500 you get, or you contribute, you get $1,500 from the government. Still good, but definitely not as lucrative. In regards to retroactive years, you can go back 2 retroactive years in addition to this year's contribution. So let's say that you have at least 10 retroactive years of contributions. What I would recommend, assuming you had the cash flow to do so, is to contribute about $375 a month or $4,500 a year, which once again sounds like a massive number, but if your income is under that $117,000, you're going to get $10,500 in grant money, which is quite significant for the $4,500 contribution, in addition to any potential bonds that you may qualify for. If, as previously alluded to, you have 10 retroactive years, you could do that this year, you could do that next year, and probably do that for a couple years after that as well, as you're only really catching up 2 retroactive years at a time. So definitely something worth looking at and worth taking advantage of if you have the cash flow to do so. Now, how this would all work in practice would be, ideally you're going to open this type of account significantly before you turn 49, so that you have the ability to collect some grants, to collect some bonds, and to have that money grow. Now, because of the 10-year clawback rule, I often will tell clients, expect to start receiving payments in the year you turn 60. Now, a registered disability savings plan, disabilities can vary between physical and psychological, cognitive impairments. Not something that is up to us to determine. This is actually determined by a medical professional and comes down to whether or not you qualify for the disability tax credit. So definitely consult with a financial professional, but do not consult with a financial professional on if you qualify or not. That will be up to a medical professional. We are going to assume here, looking at this calculator, that we're starting with $0 and that we're going to be contributing $1,500 a year and receiving $3,500 a year in grant money. So essentially assuming that our income is below $117,000 per year, but also above $57,000 because we're assuming no bonds here. So this could actually be even better than this, but I want to be semi-conservative with the assumptions. Now, we're also assuming only 20 years of growth because, as I alluded to previously, a lifetime maximum of $70,000 in bond money. So we're doing essentially $3,500 a year over 20 years. So let's put it this way. You're 30 years old. You just opened this account. We're assuming you're not getting any retroactive or catch up or anything. We're just starting today and contributing and seeing what we can do. So assuming you can get 8% per year, which a growth portfolio is definitely a reasonable way to get there, we're looking at $228,000 for you putting in $1,500 a year. Definitely pretty awesome. Now, I mentioned earlier that these are intended for retirement purposes, and that one way that they prevent people from withdrawing money from it previously is by clawing back any grants or bonds that have been paid in the 10 years if a withdrawal is made. So I said 60, that put you to the end of the year, you turn 50. Now, if we let it go another 10 years at 8%, that brings up to $493,000. And now we'll say you're 60 years old. We want to deplete the entire account. We're going to be a little bit safer. And no, we're going to be a lot safer, say 5% return. And we're going to stretch this out over the next 35 years. So put you to age 95. Most of us won't make it there, but you know what? Let's see what we could get. That would be $30,000 a year that could be withdrawn from this account. And once again, sustained until age 95, assuming a growth rate of 5%. Now, a lot of assumptions made here, but and not being indexed for inflation, so that is literally $30,000 a year. But cool to see what $1,500 of contributions from now for the next 20 years can potentially turn into. So please, if there is someone you know, whether it be yourself or someone you care about, that is eligible for the disability tax credit, please reach out to a financial professional and ask about the RDSP account. Feel free to reach out to us directly about that too at nixinvestmentlab@gmail.com. Please like, comment, subscribe, and see what future videos we have coming out soon. Thank you so much, and have a wonderful day.